Today we're breaking down ticker symbol OPEN, as known as Open. This chart has completely flipped in the past month, up over 170% with record-breaking volume. What I want to show you guys is how this isn't just a random spike, but a move that could be setting up for a much higher levels if it holds. We'll go over the key support, resistance, and upside targets, and I'll explain why this setup has my full attention at the moment. For years, ticker symbol OPEN has been nothing but a downtrend. It bled all the way down to under $1. Most traders wrote it off, but now the picture has changed. Look at this monthly candle, massive range, massive volume, and it closed green above previous resistance. That's a complete shift in momentum. This kind of candle doesn't happen unless there's real money stepping in behind it. You can see the yellow zone I've highlighted, that it's been a heavy supply zone for years. Every time Open came into this area, sellers took control. Right now it's testing the upper edge of that zone, right around that $5 to $5.30 level. If it clears and holds above this level, it opens up a lot more upside. This is a textbook example of a multi-year breakout setup. Now let's talk about price targets. You first have the $7.30. This is the first target. That's the cleanest level above this breakout and could be reached quickly if momentum continues. You next have $10. That comes after that. It's a psychological level and also a prior resistant point that lines up perfectly with this structure. And if strength really carries, we're looking at around $14.52. That would be a massive move, but the chart is showing that the potential is there. When a stock breaks out a multi-year base, it doesn't just stop at the first level, it usually runs until it finds real supply, and these are the levels to keep on the radar. What makes this move different from other bounces is simply volume. Nearly 5 billion shares traded this past month. That's the highest we've seen in years, and volume is what validates price. Without it, breakouts fail. With it, they sustain. Also, look at this monthly candle engulfed almost a full year of previous price action. That's a complete reset of trend, not just a short-term bounce. Now, as far as risk, for me, these are the key levels to watch on the downside. You first have $4.92. That's the short-term support. If we stay above this, momentum remains strong. You then have $4 to $4.20. This is the breakout demand zone. If price pulls back into here, that's where buyers should step back in. As long as Open stays above this level, the bullish case is intact. If it loses $4 with heavy selling, then the breakout thesis weakens. Open went from a high price ticker to a penny stock. Moves like this usually comes after most people have given up. That's why they're powerful. The market loves comeback stories, and when a beaten down stock regains momentum on the higher time frames, it attracts both traders and longer term investors. That's exactly the type of setup this chart is showing as of now. And if you look at the buying pressure to kick off the week, it's clear that traders weren't just sitting around, they were waiting patiently all weekend for this move. The moment the market opened, literally today, the floodgates open with it. That kind of demand tells you one thing: buyers are confident, they're stepping in aggressively, and they don't want to miss what could be the start of a much bigger run. To sum it up, Open is sitting right on the edge of a breakout zone. $5.30 is the key line. Above that, I'm watching $7.30 to $10 and potentially $14.50. On the downside, you have your $4 zone, which is the support to watch. If momentum holds, this could be one of the most explosive charts of the year. If you found this breakdown helpful, make sure to hit the subscribe button so you don't miss future setups like this. And drop a comment, are you watching Open, or do you think this is just a dead cat bounce? I'd love to hear your thoughts. I'll see you guys in the next video.